I think it was the one that was titled Unleashing American Energy. There is a fair amount of discussion on reform of NEPA permitting, which NEPA, for anyone who doesn't know, is something that can really hold up any project, whether it's LNG, could be a solar farm, wind farm, natural gas pipeline. I mean, all these things go through NEPA review, and I think Trump, I want to say he instructed the Department of Interior, perhaps a couple other agencies, to see what they can do to try to really change that landscape.
Ørsted, which is, I would say, the only sort of pure play offshore wind developer in the world right now outside of China. They also reported that they were recording new impairments of more than 1.7 billion US dollars just because of US interest rate volatility and because there were new delays in their US portfolio. So these are really, really bad news. I would say this is no way to sugarcoat it. I think the federal freeze for offshore wind will have an impact.
Oil and gas production did extremely well during the Obama years, and did well during the Biden years as well. We had record production. We had the export ban reversed. The industry did extremely well from a mechanics, from the operations perspective. The one thing that remains the key hurdle to unleashing even more oil and gas is the midstream component, is being able to build anything across state lines. That is the limiting factor.
How do you read the tea leaves on kind of the political landscape for U.S. LNG under Trump?
Yes, I think it's a material difference, the support behind the industry, but it's going to be a while before we see some results. At least that's what I think. He came in, he was aggressive, lifted the ban on his first day, ordered expeditious review of applications, once permitting reform, but we don't know exactly what that all looks like. And then on top of it, there is a backlog at the Department of Energy, right? It's going to take some time to go through the applications.
Good morning, good afternoon, everyone. This is Rob Barnett, and I'd like to welcome you to today's BI Energy Exchange, where we talk about our research and the latest developments in energy markets. On the call today, we've got Patricio Alvarez joining from his usual perch in Madrid, then swinging across the ocean. We've got Talon Custer joining from, it looks like a lovely undisclosed location in New Jersey somewhere. So, and possibly we'll be joined by Vince Piazza. I think he's got he's double booked here at the moment, but we may have one additional colleague joining. We've had a flurry of developments in energy markets since President Trump started his second term, including a number of executive orders. We've got lots of news related to OpenAI and data centers. So I think let's start with data centers, because that seems like a fun topic that really, I think, investors and folks are still getting their heads around. So yesterday at the White House, we had Sam Altman joined by SoftBank and Oracle's CEOs talking about a project they're calling Stargate. Love the name. And the idea is that they're going to spend upwards of $500 billion to build out some data centers for development of AI in the U.S. We've got a note out on this topic, but I want to get a sense from you, both of you, on this topic, because I think it plays well into gas story. I think it plays well into the power demand story and utilities. So Patricio, let's swing to you first for this. Give us a sense. I've got the feeling that there's a transatlantic divide on kind of a little bit of the AI story, but I know some of your companies are playing in the U.S. So give us the lay of the land. How do you read all the developments in AI? How much energy or power are these systems using, and how do you interpret what we're seeing here at the moment?
Sure. I think I can speak just to tie it back to the election and the transatlantic divide. Um, we had an interesting announcement in the UK last week where the government provided a positive response to what they call an AI action plan, where they will likely set out these AI growth zones in the UK, which we think will be mainly near or closer to nuclear power plants and possibly offshore wind resources in certain parts of the UK. So it shows you at least that there's a willingness and an appetite to incentivize investment in AI here in Europe. I would like note the UK as one of sort of the country that's spearheading these plans or putting them in sort of a concrete plan. So we expect to see some incentives in the spring budget, perhaps, to try and catalyze those investments. But returning to that transatlantic divide, power demand in Europe is still very much stagnant, especially when you look at the electrification of industry. So industrial demand is very weak still in Europe, and that's just across the board, not only the UK, but also Germany. European power demand has declined roughly 6 to 7% since 2008. And we think that there's scope for a 2% recovery perhaps this year from that 7% drop. And that's mainly just because of weather. So we think that there will be more gas-fired output this year, just because the winter has been colder, but not really because of a strong revival in industrial activity or sort of that, let's say, a tangible increase in data center demand yet. But we do think that that wave of investments in AI and data center deployments will present at least some marginal opportunities, I think, for renewable developers here in Europe. But the brunt of the increase or that surge in power, we still think that's the epicenter for that will be the US.
You mentioned nuclear, so I just want to circle back on that real quickly with you, Patricio. You flagged to me this morning about the potential restart of a project in South Carolina. Santee Cooper got halfway through building a nuclear power plant. It sounds like they're potentially going to get that moving again, kind of around this general theme. So, what's your sense? How quickly can we really move on nuclear? And is this a viable solution for the speed with which the AI folks are trying to move?
So I think that, I mean, I was surprised when I saw that news release that I shared with you, Rob, on this. This would make it, I think, the second sort of co-location project that's being proposed in the US to sort of plug data centers directly to a nuclear plant. In this case, it's mothballed plants, so this means that these were closed for a couple of years already. We will see. I think this is still it's the bid, so we will see what the EPC companies bidding into it will propose. I think reversing a mothballed. I mean, I'm not a nuclear expert, but I know I would assume it would take a couple of years and it's not going to be cheap. But if you compare that to the alternative of building new nuclear capacity, so the traditional form of reactor, that tends to take north of a decade, and it's also very, very capital intensive. So as you allude to, I think the pace or the speed at which the hyperscalers want to get new power sources, we'll probably see more of this type of deals, coming into the spotlight, because it's probably easier to repurpose existing facilities rather than to try and build new nuclear plants.
Yeah, interesting. And I think the state of South Carolina spent something like $9 billion on this particular project, and then kind of walked away from it. So in some sense, it could be great for the folks there if they actually finish it. My parents and my sister live in South Carolina, so that's a cost the ratepayers of the state have been shouldering with no discernible benefit. So it'd be nice to see if we can get that across the finish line. Talon, I want to swing over to you. I know you've spent time as well thinking about the role that data centers could play in the U.S. gas market, and you've had some work in the past, kind of looking at how midstream folks could have some exposure there. So, what's your read on kind of where that's at here at the moment? And do you think we potentially move even faster under Trump's second term? He seemed to enjoy the limelight on this topic yesterday.
Yeah, I mean, I would like nuclear to be a bigger part, but the timeline doesn't work out for a lot of them. Hopefully, they can get some of these projects up and running. But I mean, gas is an immediate solution. And we've discussed before, there's a lot of forecasts out there, range, maybe 2 to 10 BCF a day of additional gas demand by 2030. But that's by 2030. 2035 is a different story. Everything depends on the pace, right? So for now, I'm leaning more toward the lower end of that forecast by 2030. But Trump and Stargate, obviously, this adds fuel to the fire, if you will, to get it moving even more. But it's certainly an opportunity for the midstreamers, with especially in places like Northern Virginia or Texas. Williams and TC Energy, Energy Transfer, Kinder Morgan. Those are 4 companies that we've said before that have very high exposure to this growth opportunity.
What's your sense on the competition between demand for gas? Do we approach a world where data centers plus LNG are really kind of changing the paradigm in North America? In your perspective, does this realign longer term expectations for commodity price or anything like that? I mean, because I think these are the 2 big growth vectors, but are there others you're paying attention to?
Yeah, and I would also like to hear Vince's opinion on this, because I believe he joined us. But the main growth is LNG. Obviously, we have LNG that export capacity could double by the end of the decade. That's the main driver. You have exports to Mexico, industrial demand, AI data centers, but it is LNG is the main drive. And we're going to need prices to be higher to incentivize the producers to drill, right? But it's a matter of where that sweet spot is and how supply and demand evens out. But I mean, prices will have to be higher, and we're probably going to need gas from more tertiary basins outside of just the primary, Permian and Appalachia and Haynesville. We're going to need more gas from other areas, and we're going to have to transport it there as well, which is also an opportunity for midstream.
Okay, fantastic, Vince. Let's get you into the conversation. I already alluded that you might be joining us. So great to see you here on the call. What do you make of this continued AI news that we're seeing? And I'll frame. I'm going to give you a sense that look. I mean, is gas one of the pick and shovel angles on thinking about AI? And how do you frame this opportunity, and where do you see it relative to LNG as well, as Talon and I were just chatting about?
So, good morning, everyone. I'm going to talk my own book here, because we have been advocates of natural gas as a winning feedstock as we head into this administration, and even for the near-term future, quite frankly, because we have copious amounts of it. And it is easily accessible, because when you drill for oil, you get the gas as well. And the Permian Basin is one of the leading associated gas producers. That's optionality. You are selling the liquids and you're getting the gas as well. So Appalachia has grown from a very small book to a very large piece of the global natural gas pie, and so is Haynesville. And consolidation has helped control the production. This isn't going to be a factor of, do we have enough capacity? We have the capacity. The issue will become is there enough demand growth to maintain, to keep up with the amount of supply? And Talon's right. It is about the pacing, how quickly we can get these trains up and running. We have line of sight through at least 2029. Talon can tell you that. The AI projects, some are behind the meter, which take less time to build out. But as you can understand, the data center developers also want the secondary and tertiary fuel sources. They want and that's fine as well. And we need all of those fuel sources to come through. I'm on the lower end of that AI demand trajectory, but I think it's going to grow. LNG remains the key piece of the pie. These are the secular structural growth forces. The cyclical components will remain. I mean, winter weather here. I mean, look, we're seeing it this week here on the East Coast. We're seeing it down in the South. So those cyclical components give you the seasonality, but it's those structural drivers like the AI growth, like the LNG growth that we did not consider 5-10 years ago. But we're seeing it now. We're seeing it now, the importance of the spot market into the Atlantic basin because of Russia and Ukraine tensions. And I think that's only going to be much more critical going forward as well, because there's no near-term solution right now to this conflict. And it seems that European storage is low relative to last year, and we could see some molecules, more molecules heading to the Atlantic in the interim. But longer term, it's going to be LNG and AI, and that growth it will not outpace the level of capacity or productive capacity that we have. But we're in the driver's seat right now, and I think these producers are doing what they can do to not only placate the investor base, but also drive their own fundamentals. And that is a focus on shareholder engagement through dividends and through share buybacks as well.
Fantastic. Let me do a quick advert. So Vince and I believe, Vince, you're going to be there. We're going to be in Indianapolis, April 8th, 9th for Bloomberg's Farm, Food, and Fuel Summit. And I know we're going to do a panel speaking specifically on natty gas in North America. We did a similar panel last year. I'm sure this topic will surface in that discussion. And by the way, for anyone who is listening in, if you have a question, feel free to ping it over our way, and we'll try to get to that as part of our discussion here today. Talon, I want to come back over to you and speak a little bit more about the second Trump administration. I think it was very well telegraphed that they were going to, at least policy-wise, be more favorable towards the oil and gas industry. And I want to get your sense on the lifting of the LNG permitting pause that had been done under the Biden administration. Does this make a material difference? Kind of how do you read the tea leaves on kind of the political landscape for U.S. LNG under Trump?
Yes, I think it's a material difference, the support behind the industry, but it's going to be a while before we see some results. At least that's what I think. He came in, he was aggressive, lifted the ban on his first day, ordered expeditious review of applications, once permitting reform, but we don't know exactly what that all looks like. And then on top of it, there is a backlog at the Department of Energy, right? It's going to take some time to go through the applications. You have Biden's study that he released at the end of the year on what legal grounds can activists go against these projects. And we already have legal challenges against a number of projects: Rio Grande, Texas LNG, Commonwealth, just to name a few. So we need more clarity. It's a matter of the pace. Ultimately, we do expect, some approvals, potentially some FIDs by the end of the year, but we just need more clarity on what exactly this means and how quickly they can move and get past some of these legal challenges and ultimately make, the biggest problem is the permitting reform. We have to at some point make it so that they can't be challenged. At a certain point, you go through the environmental studies, the public comment period, and then, it needs to be final, where, Rio Grande right now it took FID, it's under construction, and then it had its FERC certificate sent back to it because of a DC appeals court. So again, expect some approvals, but I think it may be slower moving than many hope.
Yeah, you mentioned permitting, and I'm quite curious on that topic as well. So in one of the executive orders, I think it was the one that was titled "Unleashing American Energy," there is a fair amount of discussion on reform of NEPA permitting, which NEPA, for anyone who doesn't know, is something that can really hold up any project, whether it's LNG, could be a solar farm, wind farm, natural gas pipeline. I mean, all these things go through NEPA review, and I think Trump, I want to say he instructed the Department of Interior, perhaps a couple other agencies, to see what they can do to try to really change that landscape. And I think that'll take years to really kind of see where it goes, to take across the finish line. It doesn't change anything immediately. But if there was permitting changes so that, because I think for any of these big energy infrastructure projects, you're talking about just mountains of paperwork. I mean, God help you if you want to build a nuclear power plant. That's probably the biggest. But, there's a lot of lawyers involved, and it takes many years to just get through that stuff. But the construction is often like the fastest piece of the project, which is quite interesting. Patricio, let's get you to weigh in on the flurry of exec orders from Donald Trump the other day. I know you've got a report out on the topic, but can you give us a sense on kind of how to think about the utility landscape here under the next 4 years?
Sure. So I think our main reaction, we actually did a react. We don't have a note out yet that's comprehensive, sort of on a post inauguration day basis, but we recently reacted to the ban or to the freeze of new federal permitting for lease beds for offshore wind, and that came at the same time as Ørsted, which is, I would say, the only sort of pure play offshore wind developer in the world right now outside of China. They also reported that they were recording new impairments of more than 1.7 billion US dollars just because of US interest rate volatility and because there were new delays in their US portfolio. So these are really, really bad news. I would say this is no way to sugarcoat it. I think the federal freeze for offshore wind will have an impact on the sector. Of course, there are a few. There's a handful of projects that are still being constructed. For example, Revolution Wind and Sunrise Wind, both let's say developed by Ørsted. Those won't get affected by the freeze, but it is the new prospective projects that will get will get hurt by this moratorium. It also reduces, we think it will reduce M&A activity in the sector. And if the trend of, let's say, of balance sheet de-risking that we've seen in the past 2 years, so a lot of developers have actually exited their stakes and sold off their renewable asset stakes to either private funds or infrastructure funds, we think that this permitting pause will definitely freeze M&A activity and perhaps will lead to some funding pressure for the likes of Ørsted and perhaps other players. I would note that across European utilities, Ørsted is sort of yeah, the company that is most directly exposed to this slowdown. Other companies like Iberdrola and National Grid, which have more sort of network assets and also have some renewables in the U.S., but they also have substantial network portfolios in the U.S. We don't think that they'll face a similar backlash just because regulation for network spending and ratepayers and that's decided at the state level, and we don't think President Trump will have major influence, at least not in the near term. Perhaps we'll need to wait and see what happens with the FERC chair and what his nomination is there, but we don't expect a major shift just because that's managed mainly at the state level.
Yeah, very interesting. I think just like LNG, the offshore wind pause was pretty well telegraphed through the election, and so I don't think it's that shocking that we're going to pause offshore permitting. You know, my general sense, if you've got a project that's already got its permit, you're under construction, you know, those things probably move forward, but the U.S. is certainly not lining up to be a big player in offshore, but I would note that the U.S. is already essentially like a rounding error compared to Europe, UK specifically, or China, and so you know, maybe this wait and see approach, you know, let the technology improve for 4 years, and we'll revisit it a little bit later. Vince, let's come over to you just to get your general lay on the wave of executive orders. I like the title of the note that you put out just I think it was either yesterday or this morning, but political vagaries, gamemanship won't affect energy in the long run is the name of it. So tell us about what you're thinking of how all this sort of heightened rhetoric kind of plays into the North American energy landscape.
So whenever I discuss this, I tend to have to give a disclosure. I am indeed a centrist. I have no political leaning. I am neither a Democrat nor Republican. I hug the 50-yard line, and I just look at the stats here, and you know, oil and gas production did extremely well during the Obama years, and did well during the Biden years as well. We had record production. We had the export ban reversed. The industry did extremely well from a mechanics, from the operations perspective. The one thing that remains the key hurdle to unleashing even more oil and gas is the midstream component, is being able to build anything across state lines. That is the limiting factor. And so that in of itself is more than just politics. That's civic organizations getting involved, friends of the trees, or friends of various animals that are protected. And it takes a very long time to put a piece of pipe in the ground. MVP needed basically an act of Congress to get built. So when we think about the politics behind all of this, energy has really done well irrespective of who's in that seat. And a lot of these orders that we've seen over the last few days are really, I'm going to call it sentimental, because they have very limited impact on the day-to-day. LNG, yeah, it's great. We have line of sight to 2029, as Talon has mentioned to me many times. And so, yeah, let's build what we got, and then we can deal with whatever else we need. Reversing the ban on millions of acres of offshore. Well, guess what? We have a lot of permits that we have to go through currently. So again, a lot of these things are, they improve the sentiment for the industry, knowing that you have an advocate behind you, but they will not affect the day-to-day. Unconventional drilling was not government fiat. It was a company led by George Mitchell in Texas who worked on the secret sauce, and that was through multiple administrations, and that innovation unleashed a boom. It wasn't government fiat. So I think when we think about the politics behind it, a lot of it is noise. Most of it is noise. And this industry isn't going to produce because DJT says, let's produce more energy. They're going to produce if the investor base wants the molecules. And right now, the investor base doesn't want the molecules. They want the excess cash. They want special dividends. They want the buybacks. They want controlled output. And they want to see free cash flow. So I think those are the drivers, not government fiat. Now we're probably going to get 1,000 emails of folks complaining about that commentary, but that's just the truth, and let's call it what it is.
Vince, I love you've had such a disciplined message on this for some time, and so I like your thesis that the market forces are what really drives things. Just two quick bits of advertising, real quick, before we take a few final questions. One is next week we've got a external speaker, David Bellman, who works for a company called SynMax. They're a geospatial data company. He's going to talk about using satellite data to interpret the pace of building out power plants, LNG terminals on down the line, and kind of using a unique data set to kind of think about that. We'll both be in Miami for that, and we're also going to have Mike McGlone join us. So I don't know if you're based in Miami, you want to have a coffee next Wednesday, give me a shout. We'll say hello. And then the week after that, we've got Jeff Osborne and John Miller from TD Cowen joining to talk more about their perspective on the energy landscape under Trump's second term and what it could mean for renewables, clean tech, generally gas as well. So Talon, I want to come back over to you with a question. I think we can all kind of round robin this one a little bit, but when you think about the theme of AI data centers or LNG, can you give us a sense of which midstream companies names are kind of most levered to these themes?
Yeah, so I mentioned earlier with AI, Northern Virginia and Texas are two hotspots for data centers. Northern Virginia, Williams and TC Energy have extensive gas networks up there. Whether it's behind the meter, connecting to a utility, new pipes, laterals. If you have an established network, it's a big advantage. So those two in Northern Virginia, that general area. Texas, it's more, I think, Kinder Morgan and Energy Transfer have the most opportunities. As far as LNG, there's quite a few. I mean, Kinder Morgan has a big gas network down, near the Gulf Coast. DT Midstream, it gets a lot of gas from Haynesville. Williams is building pipe, Energy Transfer. So in terms of that, because you're getting it from Haynesville, Eagle Ford, Permian, there's quite a few midstream operators. So the ones I mentioned, Enterprise Products, ship some gas. I'm definitely missing a few, but off the top of my head, those are the primary ones that have a lot of exposure to LNG feed gas.
Fantastic, Patricio. Let's bring the same question over to you. Let's get a sense. Either AI or LNG. Kind of which of your names are kind of levered to those themes?
Sure, I think for Europeans are mostly takers of LNG, not producers. So right now the pricing would make it I would say wouldn't make for a scenario where a lot of importers are going to make a lot of money, or midstreamers here in Europe. I would say most of the upside, if you look at LNG prices at the moment, is that European wholesale power prices are higher than last year. So there's actually been a sustained rebound in spot power prices. So if anything, I think that the frenzy in AI demand will not only mean that new power plants will be built mostly renewable, so that obviously has some supportive trends for some of my companies. But I think it's also the fact that spot power prices will be higher, which means that the energy trading desks at companies like ENGIE, RWE, SSE, and Centrica. So these are sort of the more gassy names across the utility space in Europe. We could see some surprise there. We think that consensus for especially those divisions seems overly conservative for this year, and that's something that we flagged in our report for the top 10 predictions for European utilities for 2025, which we published last week as well.
Fantastic. I'll just quickly add that here in the US, I think there's a few names that are very geared in the clean energy space to the AI theme. First Solar, Sunrun, Sonova, Enphase all come to mind. They've highlighted this issue on their earnings calls, and the reality is obviously you want 100% uptime on your data center, but almost all the companies building data centers, perhaps even under the Trump 2.0 administration, continue to have goals for reducing emissions, the amount of clean energy they want in their portfolio. So while I think they will probably rely heavily on gas for some component of what they're up to, I think solar plus battery storage is going to feed in well to what's going on there as well. And Vince, we're going to give you last word if you want to highlight some of your names that kind of are exposed here.
Yeah, sure. So those companies that have exposure not only just to the Appalachia piece, but also the Haynesville piece closer to the Gulf, names like Expand, which is the amalgamation of Southwestern and Chesapeake. They combined in a very large M&A transaction. They are now the largest natural gas producer, largest independent natural gas producer. They eclipsed EQT, which is another name that is feeding that AI pipe as well. I would isolate those two, but I would not ignore what's going on in Appalachia in general. Range is obviously a smaller name now, but it was the first mover in Appalachia with some of the most pristine core acreage in the southwestern corner of the Marcellus with very economic acreage there. So, the names that we continue to talk about are the names that continue to be front of mind for us and a lot of the investors and the things that they're doing, advancing the cause for natural gas in the U.S.
Fantastic. I actually just noticed a couple more questions, and so since we're all still here, we're going to run over a little bit more. Talon, one of them's for you. One question just relates to the pacing on LNG, and the question is whether it's the completion of LNG facilities or pipelines that's the bigger constraint on the timing. Can you give us any sense on that?
I think it's more the LNG plants. I mean, there's been delays. We've had cost overruns, labor issues, right? So Golden Pass got pushed back. An EPC went through bankruptcy. So it's just a matter of, in the LNG space, yes, there's a couple operators that bring these plants online within or under budget, but for the most part, cost overruns and delays. It's just a factor of what it is. But now it's complicated by legal challenges, right? So I mentioned NextDecade's Rio Grande project took FID, construction started, then the DC Appeals Court, revoked its FERC certificate, sent it back. It's still under construction, but this is going to be a long process in terms of at certain points, construction could be halted. We have to see how that plays out, and it could ultimately delay because that has 3 trains under construction, supposed to come online maybe by the first one by the end of 2027. That's probably pushed back. So really, it's just a matter of how quickly can you get them on, and then how quickly they ramp up. You have a commissioning stage, then you have commercial operation state. So I think it's more of that. I mean, the pipelines got all their permits and they've gone through, they've run the gamut of everything they have to go through to have it, propose it and have it built. And many of the pipelines are built already that feed some of these projects. And then you have Permian egress. A couple large pipelines reached FID last year that are going to come online at the end of 2026, heading to South Texas before a lot of this capacity comes online. So I think it's more of the LNG plants.
Okay, fantastic. And then I think this will be the last question, and I think I can quickly try to answer it. Is just is there any read across for the onshore wind segment from the permitting pause on offshore? And I don't think there's too much there. So offshore really is very much under the purview of the federal government because it's occurring in waters that are administered by the Bureau of Ocean Energy Management, fun acronym there. And most of the onshore wind projects occur on private land. There's some that occur on federal land. So perhaps if there's some wind projects out in the sort of ether that are on federal property, perhaps you could see some sort of pause or slower rollout there. But for the private projects that are occurring on, farmland in Iowa, those kinds of things, I doubt there's going to be too much of a headwind there. Ironically, I mean, especially given all of the emphasis on reducing permitting requirements, making it easier to build things, it would just be somewhat ironic and I think difficult to thread the needle if you sort of say, hey, we're going to reduce NEPA requirements, we're going to make it easier to get infrastructure built, except for wind energy. I think that's too hard of a policy to try to implement. So my general sense is that onshore will be sort of generally governed in the way that it has been, and keep in mind that there are a lot of state level incentives, policies, drivers that are really helping to fill out some of that narrative there. So with that, I think we're going to close it out for today. But again, we hold these calls every Wednesday. Please join us as frequently as you'd like. And if you enjoy the discussion, share it with your colleagues. We're happy to have more folks join in and listen to what we have to say and ask us questions. Take care, everyone. We'll talk to you soon.
Thank you.